Hey there, Arthur Hill here with StockCharts.com. It is Tuesday, March 19th. You're tuned into On Trend. So we've got a mixed up March, but we're still doing fine year to date, and the overall uptrends are holding. We're going to look at the Semiconductor SPDR and the Semiconductor iShares, which hit a new high, as well as a number of stocks. The finance sector has come to life with a bullish breadth thrust, and we're going to look at some breakouts in banking stocks. So things have turned mixed in March, and to see that, I'm going to show some perf charts here, performance charts, and I'm going to show year to date, and then I'm going to show just March. And we're going to start off with some major index ETFs. We've got SPY, we've got the S&P 500 equal weight ETF, QQQ, equal weight QQQ, the Dow Diamonds, DIA, mid caps, the small cap iShares, and the Russell 2000 small cap ETF. And you can see the percentage change scale on the right. So these bars, the bigger the bar, the bigger the percentage change. And so we can see that the Dow is the worst performer. It's still up 11.7%, but it's up the least. And you can see the best performer is the NASDAQ 100 equal weight ETF. And that tells you that there is broad strength in the NASDAQ 100 ETF because it is outperforming the cap-weighted QQQ. And we can also see that the Russell 2000 on a year-to-date basis is also leading. It's the second best performer this year. Now, if we back this out to 13 days, we can see the picture is going to turn a little bit more mixed. And the reason, of course, that I chose 13 days is because that will be the month of March. And we can see that the Russell 2000 ETF is down, the IJR, the S&P Small Cap 600 iShares is down, mid caps are flat, the Dow is flat, and then we see large caps. S&P 500 SPY is up 1.76%, QQQ up 3.22% and leading in the month of March. But you can see overall the picture has turned mixed. So next we have a perf chart, and this is year to date as well. And there is the performance for SPY, and you can see the sectors that have histogram bars above are outperforming, like technology. Industrials is still outperforming despite what happened to Boeing. Energy is outperforming, and REITs are outperforming. And then you can see discretionary, communication services, and financials are performing in line. Healthcare is underperforming year to date. That is interesting. And then we can see materials, staples, and utilities are underperforming. But everything is up year to date. Now, if we back this out and we go 13 days, which is the month of March, you can see things change. But still, gains across the board, technology leading, and industrials down because of the Boeing debacle. So now we're going to go to the equal weight sector ETFs, and we don't really need to know the sectors here. I just want to show you the change in the histogram bars when we go from year to date to just March. You can see this is year to date, and everything is up, and things are performing pretty well overall. And then we go to just March, and we can see that some weakness has crept into two sectors in particular. This is the equal weight consumer discretionary ETF. It is barely up. And this is the industrials equal weight ETF, and it is down a little bit. So some weakness creeping into those two sectors. And then things really take a change when we look at the small cap sectors. So here are the small cap sectors year to date, and you can see that everything is up, and everything is up handsomely. But if we back this out to just 13 days, we can see a completely different picture. All right, only two sectors are up, and that would be energy, and we can see the utilities ETF. And then we can see that these other sectors are down. Okay, that's IJR. It's down in March. We can see consumer discretionary, finance, technology, and industrials, and healthcare are all down. So small caps are bearing the brunt of this recent selling pressure that we've seen in the market. And we can see this when we look at the candlestick charts for SPY, QQQ, and IWM. So here we can see that SPY has moved above that high there from the early part of March. So it is clearly leading, had that little gap up and just continued higher. And you can see RSI remains above 50. So the trouble doesn't start unless RSI moves below 50 there. If we look at QQQ, it is leading the charge. You can see here that we had the meeting lines candlestick pattern that was pointed out, and then we had a gap up with a long white candlestick after that and continued to a higher high. That's a new high for the year, and RSI finally made it above 70 for the first time this year. So as long as RSI holds above 50, the bulls are clearly in control. And then the trouble starts when we look at small caps and IWM, and they're at a point of inflection here. And that is because you can see where IWM broke support with that sharp decline. And we got a bounce, but it's been stalling out the last 4 to 5 days, kind of broken support turning into resistance. And I'm sure if you put a Fibonacci retracement from here, that would be about a 61.8% retracement. So this is kind of a moment of truth. And so if IWM breaks here, then that is going to signal a continuation of this decline, and we could see further weakness towards that 38% retracement. And keep in mind that IWM showed weakness with RSI because the other RSIs for QQQ and SPY held above 50, whereas IWM broke below. So that's what I would be watching here in the coming days. As long as IWM holds up, okay, but if it breaks down and SPY turns down, IWM will probably lead on the way down. So we've got some leadership coming from the semiconductor group. Here is the SOXX, which is the Philadelphia Semiconductor ETF from iShares, and it is usually weighted towards the large cap semiconductors like Intel and Applied Materials and Texas Instruments. But you can see on this chart here that that is a new high for 2019, a high of the year. You can see the breakout above this prior high and above the 200-day, and a successful test of the 200-day there. So we can probably mark that first support level there. If we close below the 200-day, then we'd have to reevaluate. And if RSI closes below 50, then you would have to reevaluate this upswing. Now, if we move to the semiconductor SPDR, which is a broader based ETF because it has over 50 stocks in it, and they're relatively equally weighted. And you can see that it hit a 52-week high there in February. So it has been leading here in 2019. You see the break above resistance in the 200-day. 200-day has got a slight rise to it. You have a low there to watch. Put a little buffer in. If you close below 74, then you have to reevaluate this upswing in semis. And RSI continues to hold that 50 level, so you can watch that level too for the first signs of a momentum downturn. But one thing about semis is if I back this chart out, I'm just going to go 2 years. It's going to get scrunched up, but you can see that this is just one big volatile road to nowhere. Actually, it is a 52-week high, but we can see here, you know, we have higher highs and we have pretty much lower lows. And, you know, if you have a bearish bias, you'll say, oh my God, that is the biggest bearish broadening formation I've ever seen. As far as broadening formations are concerned, I really don't use them. I pretty much ignore them. It's the swings really within the pattern that I think you have to watch out for. I mean, when are you going to turn bearish? Are you going to turn bearish on a break below 58? Below this low? Well, no. And then you're going to be way oversold and probably ready to bounce. But we can see, if I go back to the previous chart here, you can see that there's a clear upswing underway, and that's the swing that matters. All right, if we reverse this upswing, then we have potential issues for the technology sector, which is leading the market. And if the technology sector gets in trouble, that would take away one of the pillars of the current market advance. So that's something we need to watch. So I went through the stocks in the semiconductor ETFs and I picked out some that I think we should watch with some bullish setups, and a few of them have bullish flag patterns, and I highlighted 2 bullish flags last Thursday in Applied Materials and Skyworks, and I've got another one here with microchip technology. And what we can see is this big surge, and actually it's a second big move. So we moved above this prior high, above the 200-day. 200-day is still sloping down a little bit. But after a move from, say, 65 to 90, you're entitled to a rest. I mean, that's like almost a 50% advance. And so that is a rest, a correction, where you fall back a little bit and you're testing the 200-day on the other side, and this kind of resistance breakout turns support. We're just above it. And so I'd be watching for a breakout here. If you can break above 88, I think that would be bullish for microchip technology. You can also see RSI in the indicator window. Now, the 50 line in RSI is the midpoint, the exact midpoint. And when you're above, that means prices are generally advancing. When you're below 50, prices are generally declining. And you get a lot of moves above and below 50, so you'll get whipsaws. And that's why when people look at RSI ranges, they put a buffer on them. So they say, okay, this 40 to 50 zone is going to be my buffer for RSI. And if RSI trades in that, say, let me move to my rectangle here. If RSI trades in the 40 to 80 zone, it's got a bullish bias like it's been doing. And so you can see it's kind of at the moment of truth here because it's in that 40 to 50 zone. So if it fails and breaks down below 40, that's more bearish bias. But it could, this is a point where you might get a reversal, a bounce, so to speak. And you can see we're flagging up and watching for a bounce there. Now I went ahead and clicked on this chart because you can add an indicator to an indicator. So you can see I've got 14 period RSI here. And I'm going to add an overlay, and I'm going to add a horizontal line, put it at 40. You can choose a color there, and I'm going to color it red. So 40:red, and then I click update. And so I'll have a red line there at 40. As you can see, it's not perfect. I mean, no indicator is. You had a brief dip below 40 twice, but for all intents and purposes, you held it. And now we're into that zone there just above 40. So this is an area to watch possibly for a bounce. So here's MKS Instruments, and it had a big move on Friday and broke out. And I'll just kind of review what a flag is with some live annotations here. So you can see here that the 200-day moving average is still sloping down here for MKS Instruments. And yeah, that's a negative. But we had a big move up, and I'll go ahead and make a green arrow now. So we color that green. So we had a really big move up. And the way you draw a flag is you have the big advance, and that is the flag pull. All right, and then you have a decline, and that forms the actual flag, and it's a correction after a big move. And you can see it's, hitting resistance right at that downward sloping 200-day moving average. Personally, I don't think there's anything special about the 200-day offering resistance. It's not like there's a line of sellers waiting at the 200-day for every stock, maybe for the S&P 500 because it's watched so much. But as far as each individual stock, it's really not that great. You just kind of use it as, when you're below, you have a general downtrend. When you're above, you have a general uptrend. I think more importantly is the breakout that we can see there. We got above this high here. So we had the December swoon. We recovered all of that swoon and more by breaking out. Now we're correcting. And the question is, when is the next move? Well, that question was answered on Friday because we got the breakout. And so technically that signals a continuation of this advance. So this advance was big. You can see, we'll go from the low measurement there, 50% advance. So if we get a 50% advance from that low of the flag, that targets a move to around 115. Now, I would not wait for that target. You can see the breakout is clearly bullish until proven otherwise. So what I would do here is mark support where that move began basically. And if you go below 80, then that would negate the breakout and you would have to reassess. And you can see there's a demand point there because you had a little gap up and that big surge. And so if you move below that, that would show selling pressure that it would erase all of demand and that would negate the breakout, and that would be the reason to reassess. And you could also reassess if RSI moves below 40 there. You can see that zone has been holding, so if it moves below 40. And we're going to take a short pause, 30 seconds, and we'll be right back after a word from our sponsor.
Join us April 1st to April 5th to celebrate our 20th anniversary here at StockCharts.com with special guests Arthur Hill, Greg Morris, Gaddis Rose, Martin Pring, and John Murphy. Tune in to Market Watchers Live at 12 p.m. Eastern Standard Time during the week of April 1st to April 5th to help us celebrate.
Now, the semiconductor group is pretty highly correlated, and I'll show a correlation here in a minute on the group. But here's on semiconductor, and there we can see the breakout and the move above the 200-day. Yeah, you could maybe even make the case for a double bottom of sorts. So you have two lows in the 15 area and a breakout that confirms it. And so if we consider that a valid pattern, then the way we would do it is, as I showed with Symantec on Thursday with that breakout, we would measure the height of the pattern. And you can do it in points or you can do it in percent. But if you go, say, we'll call it 5 points. So if you go 5 to 25, that would be the point range. And it's a 37% advance. So if you advance, say, 37% from that breakout, that would take you up to the 27, 28 area. So we've got the big surge in the breakout. We're now working off those overbought conditions with the flag. And if we get a breakout there at 23, then that is going to be bullish for on semiconductor. Now here's one I highlighted on Thursday, Skyworks Solutions with a flag pattern, and you can see that we did get the breakout there, and we didn't get above the 200-day on a closing basis, but we had a little breakout there from the flag, and then we fell back on Monday. But I think the breakout is more in play or bullish than bearish right now, despite the fallback that we had on Monday. And I see a little support level. There you can see we've got a couple of lows there just above 80. So as long as you hold above 80, I think that breakout is valid. And the only problem with these stocks is many of them have a downward sloping 200-day. This one is just below the 200-day. So if you go on a pure relative strength and leadership basis, this is not one of those stocks. You know, you have other stocks that are trading nearer to 52-week highs and well above their 200 days, and those are the real leaders. Now, there are, of course, subsets or sub-industries within the semiconductor industry group. So at the top level, you have the technology sector. Then you have semiconductors as a broad group. But, you know, the variety of different semiconductor types and stocks is incredible. And there's one subgroup that I like to focus on, and that is semiconductor equipment. And that's like Applied Materials, Lam Research, Teradyne, KLA Core. And I'm going to look at those four stocks in particular now. And we can see with Applied Materials that we have a flag breakout working. So we had a couple of lows in that 30, 32 area. And then we got a break above this high. So we did get a higher high. And we kind of fell back towards that breakout zone with the flag. But you know, you had a 43% advance. So a pullback is normal. And now we've broken out of the flag and above the 200-day. So this is a bullish breakout in the works here. And then we can see RSI has been holding that 40 to 50 zone since January, basically. So as long as that 40 to 50 zone holds, and probably put a reevaluation on a close below 38, probably a little higher, then you would have a failure and have to reassess. But right now, the way I see it is a bullish breakout for Applied Materials. Now, if we look at some of these other semiconductor equipment stocks, here's the leader, KLA-Tencor, because it has recorded a 52-week high with the move yesterday. It had a big breakout there in late January and above the 200-day. So it's the clear leader. Look at RSI moving above 70 3 times at least over the past few months. And then we look at Lam Research. It's holding above its breakout. There you can see the breakout zone, and then you had a little bit of a throwback to the breakout zone in the 200-day and got a nice bounce here. So Lam is looking positive. And then if we look at Teradyne, we can see a similar pattern. All these patterns have some similarities, at least for Applied Materials, Lam, and Teradyne. You can see the breakout and then the throwback towards the breakout zone with like a flag and breaking out of that flag here. So the finance sector really came to life over the past 5 or 6 days. There you can see XLF surging and moving above the 200-day and moving above that February high or early March high, and that's a new high for 2019. So it continues its advance. And if you look at the 10-day EMA of 80%, you can see it moved below minus 30 a little over a week ago, and now it's back above plus 30. So you've had a bullish breadth thrust. And if we look at the other two breadth indicators, you can see that the high-low percent indicator turned bullish there with the move above plus 10%, and the percentage above the 200-day turned bullish in mid-February with the move above 60%. Now we had a fallback to 40%, but didn't go below, and now we're back above 60%. So finance has come back into the lead as far as the sectors are concerned. So if we look at some of the leading stocks in the finance sector, the big banks, this is Bank of America, and it is breaking out above its January, February highs. Keep in mind, BAC here was lagging because it was underperforming when the market continued to move higher here, but now it is playing a little bit of catch up, and you can see that we have a higher low here and a break above that high. So basically, it looks like the old flag again. You have the big surge, you have a long consolidation, and now we have the breakout to signal a continuation higher, and I would expect a move above the summer highs in Bank of America. If you look at RSI, there you can see it's moving above 50 there in the early part of January. It dipped just below 50 there last week, but held the 40 to 50 zone and turned back up. So as long as RSI holds above 40 and Bank of America holds the 200-day on a closing basis, I think this is a bullish development. So StockCharts users can view any chart list as correlation. You can see here I've selected correlation for the view as option of this chart list. So this is a chart list with stocks that are in the regional bank SPDR. And there's over 50 stocks in this SPDR, and they're relatively equally weighted. And I want to see what the correlation is for the individual stocks to their industry group, which would be the KRE, the ETF. So I've selected KRE for correlation, 20 days for the correlation period. You can change that. And then you can see the correlation, and look how high it is. All right, most of these stocks they have a 90+% correlation to KRE. So that means when KRE moves higher, they tend to move higher. And then you get down to the 80s, and there's only one, PNC Financial Services, which has a negative correlation to KRE over the last 20 days. And you can do this for any chart list that you have. Here I've got a chart list for the Semiconductor SPDR, which is over 50 stocks, relatively equally weighted. Correlation for the view as option, XSD to correlate with, 20 days, And there you can see that semiconductors have a strong correlation to their industry group ETF, but not as strong as regional banks. You can see the top correlation is 0.88, where the KRE, the regional banks, had like dozens of stocks with a 90+% correlation. And as you go down, you can see you get into the 50s, and then you have one negative, integrated device technology. And Symantec has almost a zero correlation with the index. Qualcomm, it's been underperforming recently, and it has a low correlation to the semiconductor SPDR. So returning to the banking stocks, Citigroup, Bank of America, they're going to have a high correlation to each other. You can see Citigroup has a similar pattern. You have the big surge, you have the 5-week consolidation or maybe 8-week consolidation, and then we have a breakout and a break above the 200-day. So given this development here and the fact that Citigroup held that 40 to 50 zone, I would expect a challenge to the autumn, September, October high. Now, Goldman Sachs is one of the weaker of the banking group stocks. Now, of course, it's different than Bank of America and Citigroup as far as its business model. It's more investment bank. But we can see a similar pattern, a surge, a long consolidation, tighter than the others, I would say. But we're getting a breakout there. And you can see RSI held that 40 to 50 zone for Goldman Sachs. Looking at JP Morgan, it's kind of mixed as far as the business model is concerned. It's not quite Bank of America, but it's not Goldman Sachs either. Now, it had a breakout earlier, and it fell back again, but got another breakout, and it's just above its 200-day. And you can see RSI holding that 40 to 50 zone throughout February, March. So this is a positive development for JP Morgan. Now we get to a couple of regional banks that are showing some breakouts here. We've got Fifth Third Bank, and I'm sure you can see a big inverse head and shoulders. And as I've talked about this one before, my preferred pattern would be, it really doesn't matter, it's still a bullish pattern, but you have the big surge, the 8-week or so consolidation, and then the breakout there that signals a continuation higher. So provided, this breakout holds, maybe you reevaluate on a move below the 200-day there, say 2750, but I would expect a challenge to that high in the low to mid 30s. And there you can see RSI holding that 40 to 50 zone. We look at US Bank Corp, and it was one of the stronger ones with this huge surge from 43 to 51 basically, and then had, like the rest of the group, a flat consolidation, and now it's breaking out above that high. So I would expect a challenge to that high in the 55 area. And again, there you can see RSI holding that 40 to 50 zone. So I've got about 30 seconds left here, and I want to just highlight Amazon, which was featured in Don't Ignore This Chart yesterday on our blog page. But what I noticed here is you have the big surge, you had a flag, and then the breakout. We had a pretty hard throwback, but we had a nice 3-candlestick reversal there, and now Amazon has broken above its 200-day and above that high. It's at the highest level of 2019. So I think Amazon is going to move back towards those August-September highs. So that concludes this edition of On Trend. Thanks very much for tuning in, and remember to stay on the right side of the trend. Have a great day.